Happy Friday, traders. It's 8:01 a.m. Chicago time, 9:01 a.m. Eastern on the 2nd of December 2016. Thanks for joining. Derivatives trading involves substantial risk of loss. It is not suitable for all investors. Past performance is not necessarily indicative of future results. I'm sure you know by now, non-farm payrolls and unemployment came out just a half hour ago. The unemployment rate's at 4.6% versus 4.9 expected. This is the lowest rate since 2007. The market doesn't seem to care about that much. The change in non-farm payrolls is 178,000 versus 180,000, slightly lower, but not much. The change in household employment went from 160, comes in at 160,000 versus the prior negative 43,000. So overall, a pretty a pretty flat report considering. And then other than that, there were some numbers came out overnight for the UK construction PMI came in slightly stronger. And looking ahead at what we have for the rest of the session, expected to be quite fairly quiet. At 9:45 Eastern, we get ISM New York, which is a low tier number. Also at 1 o'clock, we get the weekly Baker Hughes rig count, which the prior, we don't have an estimate for, but the prior is 593. This number has also not been a mover. We have Fed Speaker Bernard is speaking right now, started about 15 minutes ago, and we have Fed Speaker Tarullo speaking at a financial stability conference. That's at 1 o'clock today. Today, overall, we're expecting, looking at how the market's moving money, and the market is moving to safety. Uh, the the uh, the futures that I'm watching show a lead by the bond market. The bonds are up 38 basis points, trading up 18. Ticks gold is stronger, 39, 38 basis points, and the negative side is all on the equity side. So money is slightly moving into safety today, and that's the way it looks. Let's take a look at what was expected yesterday versus what we got, which was a whole different ball of wax here. Definitely was way off on the hypos. Yesterday, the primary hypothesis, again, in keeping with the auction, the expectation was for dip down early and then sideways trading mostly, and we did not get that. We got a quiet open, but then the market started to sell off. Here's Hypo 2. Hypo 2 was looking for a push higher to find sellers, rotate down, and to basically get stuck at the MC point of control at 2200 and a quarter, 2200 even, the century figure. Um, and that also did not happen. Hypo 3 was the closest in that it looked for a down, looked for down pressure and for the market to test below the low of the last couple of days. But I expected it to come back in and finish in the 2200 area as well. This is the normal. I'm going by, again, how do I come up with these hypos? I go by what's normally expected or the normal behavior of the market. And you can use all kinds of definitions for normal, but this is what we got. We opened and we dropped and then we tested all the way back up. And then from there, it just could not find any traction on the buy side, and it just continued lower in a grindy sort of way. So overall, what that leaves us with is a very, very clear double distribution profile. Let's kill this. There we go. A double distribution profile. And guess what? The overnight high is right at the key figure, key number at the on the double distribution, which was the LVN in between. Double distribution simply means that the market accepted prices, then moved away, and then accepted prices elsewhere. and the 2192 becomes a clear defining line in between them. I like trading after double distribution days. It gives you a pretty clean or clear, at least it gives me a pretty clean or clear look at where the risk is or what the participants are trying to do. So that's basically the summary of yesterday. We've been trending down since the high put in on Wednesday. As you can see on this 15-minute, just a downward channel. It accelerated down through the lower end of the channel here yesterday and then stabilized back in. It's this whole week has been an interesting trade in that we've gone to hypo three, I think three out of the 4 days this week, which is very, very odd. I haven't seen that in a while. In general, I'm I'd like to think that I'm pretty good at pinning down either the first or the second hypo, and that's what I use to lean against for targets and stuff. But this week's been I've been creating a third hypo because of the fact that we are up against all-time highs, and it's been trading those third hypos a lot. So that's where we are. As far as it looks like I lost a portion of my screen here. As far as what we did overnight, the non-farm payrolls figure was very, very uneventful. The scene of the crime for this figure is at 2190. It triggered right here at 2190. It dropped down to 2187 even immediately and pushed up to 2191.50, and we are stuck in there. This, by the way, is an extremely tight range for this number. I mean, we covered top to bottom, not including the extension afterwards down here to 86.75. Top to bottom, we covered only four and a half points for this pretty major release. And it's just I think it's a sign of things to come for today. The overnight session shows nothing has happened, nothing's going on for the entire session. It was fairly balanced. We extended the range down from yesterday. Um, so it just overall, it just very, very quiet and frankly hard to see what the higher participants or the what we call the OTF or the other time frame, the higher time frame, the controlling time frame is trying to do. So with that, I just want to keep it short. Oh, we were discussing spreads, equity spreads in the chat room today, so I thought I'd share these charts with you. The Dow is relatively very strong. What this is this is the Dow over the NQ. So this is a chart that's taking the Dow and dividing it by the NASDAQ. Um, and you could see that the Dow is relatively stronger than the NASDAQ. Yesterday, the NASDAQ just dropped very hard yesterday and early and has been relatively weaker than the other indices. These indices are not generally have a pretty high correlation if you consider high, 95% or above. But I caution that these indices are generally are calculated differently in that the Dow is price weighted, which means that if a stock is worth $200, but its market cap is lower, it's still weighted much more in that index than a stock that's worth maybe $50 but has many, many more shares outstanding. So whereas the NQ is market cap weighted, but still, you can see the Dow is relatively very strong. The blue chips are very, very strong. There's just the staple kind of stocks. When we compare the S&P to the Dow, this is called a SPUD ratio spread. This is the S&P under the Dow. So we take the Dow and we divide the S&P by it. The correlation between the S&P and the Dow generally is much more stable. But you can see here since the election. So generally, we hang out down here. We hang out down here. It doesn't move that much. The spread is fairly stable over time. But since Since the election, since just before the election, this spread has been going strong as well. The Dow versus the S&P shows that the Dow is relatively much stronger, and I'm sure you've heard the Dow making all-time highs, new all-time highs, well before the S&P started to push towards and breach that 2187 area a couple weeks ago. So this is something that's interesting to note. For those of you who trade across products, you'll wanna plot this spread and monitor it and see how it's behaving as you take your positions. As far as what's expected for today, not expecting too much given the action on the overnight on the non-farm payrolls. I'm expecting the primary hypothesis to be a test down. I'm expecting a lot of chop this morning, and then I'm looking for it to break into the upper distribution and move towards the higher prices in the upper distribution, 21.95. That doesn't give us very much range, but that's our primary hypothesis for today. I'm looking for it to rotate through the low volume node and move towards the point of control, potentially push up to 21.99, and the extended target would be 2200, the MC point of control for this area. Actually, I need to extend this out. The point of control shifted down a little bit. So as I shift this, so it's about the point of control is at 21.9950. That would be the extended target for today. But I'm looking to buy early. I'm looking to buy on any sign of strength in the order flow. I'm looking to buy into the low volume node 92 and looking for a break higher. That's the primary hypothesis. The secondary hypothesis is for it to test the overnight high, push through, attempt to take the upper distribution, fall back in, and then retest the low from yesterday and take us to last week's low. The weekly one-time framing up ends down here at 2184.75, and that's the next key idea. There is no hypo 3 today. I don't expect very much. You guys can imagine what that's going to look like. I'll let you do that. I just want to keep this short. That's all I have for you for today. Again, I want to remind you, I'm doing an order flow scalping webinar on Tuesday. I've not sent the invitation out for it. Catch it on Twitter or look in the description of this video and sign on to the mailing list if you want to be sent the invitation when that comes out. It should be out today. So if not, then I'll catch you on Monday morning and again on Tuesday afternoon for that webinar. Take care and have a great weekend. Remember, it's Friday. Don't stake too much into today's trading. Non-farm payroll days, afternoons are generally very quiet. Good luck.